Welcome back. Markets have been in a melt-up period, running at record levels all year on the Trump policies. Take a look. Dow Industrials up 6.5%, NASDAQ up 10%, S&P up 9%. Year to date. Big banks are a bright spot. The KBW NASDAQ Bank Index is up 28% in 1 year. These are regional, smaller banks. The regional bank index up 8%, with second quarter earnings strong across the board. The major banks also higher, with JP Morgan breaking out just this week. Joining me right now is KBW CEO Thomas Michaud. Thomas, great to have you.
Good morning. Great to be with you.
Thanks so much for being here. And of course, KBW is at the center of so many of these large deals this year, as well as at the center of research for the banks. How would you assess the backdrop for the banks right now?
I'm about as optimistic as I've been on the fundamental in years.
Wow.
You heard that loan growth accelerated in the second quarter. We had 2 dark years in 23, 24 with the inverted yield curve. That's over. We see double-digit earnings per share growth this year and next. There's operating leverage in the industry. Credit continues to remain benign. So there's a really good fundamental story coming. Next week, there's a big bank conference in New York. We expect to hear very good channel checks from the management.
That's the Barclays conference.
That's the Barclays conference in New York, and the big banks are all going to be talking. It's probably the last moment in the quarter where they will talk. So we think we're going to hear a lot of really good channel checks for the banks. And then you've got the other stuff. The other stuff is there's going to be a lot of excitement. We're bullish on the idea of taking Fannie and Freddie public. You're seeing the Trump nominees who are now in their seats doing real things in Washington.
Cutting back regulation.
Cutting back regulation. And I can tell you, how about just to get an answer? In the prior administration, if you had a merger application, it'd take you 1.5 years to get an answer. They're now doing it in 4 months. They're not being reckless. They're just giving you an answer, which is part of the pro-growth environment that's coming out of this administration, and you're seeing it in the banks.
Well, that's the difference when you've got a businessman in the Oval Office who prioritizes growth.
Yeah.
Hello? Let's prioritize growth.
Or how about,
that's what he's doing.
How about having government that thinks a little bit about private business, which is the world that most of us operate in, which is you can get an answer. You couldn't even get an answer because of the way that the political positioning was in the prior administration.
So what I hear you saying is next week, by the way, could be a tradable event for the banks.
It could be a tradable event for the banks.
Total buy, tradable event with the Barclays conference.
I believe so.
I also hear you saying the new policies, a lower regulation, a more willingness to work with the private sector is a huge positive for the banks as well.
Huge positive.
And I want to get to Fannie and Freddie because I know every bank on the street is clamoring for that deal. But first, let me get your take on the Fed and how it's setting new capital levels for the major banks. We had the stress tests, the stress capital buffers and resulting capital requirements for the bigger banks, largely in line with what we expected when we had the Fed come out on Friday. They take effect October 1st. Morgan Stanley appealing its results, asking for a lower capital buffer. But the Fed said that it will decide on that by the end of the month. Overall, though, how significant is Morgan Stanley's appeal, and how significant are the capital levers from what you heard from the Fed last week?
So 2 things. One is my sense is that they're probably likely to listen to Morgan Stanley's appeal, whereas I think prior administrations may not even have really listened, or you wouldn't even, again, know when you'd get an answer. So there'll be a dialogue, would be my opinion. I think the big issue coming are the Basel III rules, which are going to be re-proposed, hopefully by year end. And they're going to be re-proposed with the new seated regulators. So I think that is the real focal point. And I think what you're going to find is the industry has plenty of capital. The prior response had been whenever there's a problem anywhere, hit the banks with more capital. While that happened, their profitability on capital waned, as well as they lost market share to non-banks. I think there's plenty of trapped capital in these banks, and that's part of the bull story. I think if we get capital rules that are just similar to the prior capital rules, maybe even a little bit stiffer, that will release a lot of capital in the big banks. And I think that's another part of the bull story. And also, I don't think that makes the industry any less safe. I hope that this administration pivots to regulating a bank for the type of bank it is, not just saying banks of this size are all treated equal.
Right. You can't have a brushstroke for all these banks.
No, and the prior administration dropped the rate to $100 billion for much more stringent regulation. And guess what? When they do that, no banks cross 100 billion and they stop growing, which is bad for the economy.
Yep.
Hopefully, we get away from that 100 billion number and the regulators pivot and they focused on regulating banks for the type of activities they do.
Let's talk about Fannie Mae and Freddie Mac. I love this story. President Trump is pushing ahead to take parts of these companies public. Now, I spoke with both FHFA Director William Pulte as well as Treasury Secretary Scott Bessent about that. Of course, the president's going to decide on the timing, but we're expecting these portions of these companies to go public in the fall, maybe the winter, end of the year. It's potentially the biggest IPO in history, right? And
it'll be one of the. It all depends on how much of it they.
Saudi Aramco was $29 billion, and based on what these two have told me, you know, you're talking about these two companies with upwards of $700 billion in AUM. And Scott Bessent, I asked him how much you're going to take public, and he said it's the banks telling us that we should just take about 5% public. Here's William Pulte and Scott Bessent with me just in the last 2 weeks. Watch this.
Yep.
It's great that we finally have a president that, number one, knows that they exist, and number two, is looking to extract appropriately and legally value from them for the benefit of the U.S. taxpayers. If you recall, some people tried to get the president, and he very wisely decided not to sell the companies years ago. They wanted him to sell these companies for $150 billion. Today, those companies, in my view, are worth to the United States government potentially $500 to $700 billion. I think that number is going to be going to trillion and potentially trillions one day.
So you're not going to sell all of the stake, right? The government will still hold a piece of Fannie Mae when the IPO happens?
That's correct. That's correct. If the president decides to do it, which will be on his own time frame, you know, we're in no rush. The president has a lot of popularity, so that will transfer very well into a Fannie Mae and Freddie Mac, largest IPO in history.
That's what the banks have advised so far. You know, a $30 billion deal would be one of the biggest deals, maybe the biggest deal in history. And these are very large companies, valuations in the hundreds of billions of dollars. So if we were to sell a 3 to 6% stake, it would work out to, you know, at least that. Every bank's going to be. All the big banks are going to be part of something that's this size, and you know, we're honing in on that. The president's been busy doing peace deals, trade deals, tax deals, and he can multitask better than anyone I've ever seen.
Thomas, I reported that we've had the major banks in the Oval Office with President Trump just in the last couple of weeks. Bank of America was there. Citi was there. They all want the deal. JP Morgan wants a deal. You flagged the possibility of this company going back public before it was on anybody's radar. You were with me back in November of 2024 telling us about that, and you talked about what this would mean for the banks. Here's that right now.
Fannie and Freddie stocks have doubled in a week. Okay,
in a week.
In a week.
That's amazing.
Now, and they're still in conservatorship. I think it's been something like 16 years since they were put into conservatorship. It's the last major piece of the global financial crisis that has not been resolved. Now, while it's been under the government's purview more recently, you started to see an expansion in what the government would like it to do, which I think is kind of how we got into trouble the last time. So my instincts is that the market believes they're likely to come back to the public markets with the stocks and what's happened. And if they go public, it's going to be a big event because these could be two of the biggest IPOs in American history. And the next administration could have a chance to work on that.
Talking about Fannie and Freddie being potentially the two biggest IPOs in American history.
Two of the, I'm not sure. Close.
Yeah,
I just think they think that it'll finally be addressed. Rather than lay dormant, my instincts are investors think something could happen.
So we'll see who gets this, but how important is it for the banks? Congrats. You made a great call last year.
Thank you. I think that this is very positive because financial services has evolved a ton. Fannie and Freddie have evolved a ton. They are no longer the great risk they once were. Just like the banks, there's a tremendous amount of trapped capital that's in those companies right now. I think their capital requirements are probably too high for what the companies are today in terms of how much they've shrunk. I think returning them to the public markets will be a great deal for the American taxpayers. They'll recoup a lot of their support. And I also think it'd be good for the market because you'll have a more commercially driven Fannie and Freddie, and I think it'd be a big positive. And by the way, you add these market caps to the FIG weighting in the S&P 500, it's going to be just more boost to the entire FIG sector. Already, we're the second largest sector of the market, and we're gaining on tech. We're not going to overpass tech, but we're gaining on tech.
By the way, we're about to talk with Zach Witkoff in World Liberty, and I want to get your take real quick before you go on the impact of crypto on the banks, because Mickey Bowman made a comment the other day at the Federal Reserve Symposium in Jackson Hole talking about what the impact of the stablecoin and, you know, the crypto landscape is going to be on the banks. She says if depositors flee to blockchain-based mediums of exchange, the cheap source of bank funding disappears.
I think that's the biggest risk. And bank CEOs are talking to us about it left and right.
Yeah.
And look, I think there are two big policy issues here. One is you don't want banking activity continuing to only be done outside of the industry unsupervised. I think that's bad. The magic of deposits is one reason why the country's done so well.
Yeah.
I would protect the magic of deposits and not make them fungible. And also, I would include the banking industry in how this evolves, not exclude them.
Protect the magic of deposits. It's a great thought.
Protect the magic. It's why we're here. It's why we have the greatest economy in the world.
Yeah.
And I would not take the banks for granted because they remember when the country needed the PPP loans during COVID. It wasn't the banks, the big banks. 55% of the PPP payroll protection plans came from the community banks.
Great point.
We need them.
Thomas, thank you so much for being here. Great to see you. Thomas Michaud joining us. Stay with us. Zach Witkoff on the other side of this break. Thank you.